Hi, Assalamualaikum. My name is Muhammad Takir bin Shauki and this is my partner for today.
Muhammad Adi Aiman bin Sumardi.
And we're from GBA 1144H and we're gonna talk to you about how to invest. Alright, so basically, investing in stocks is an excellent way to grow wealth. But how do you actually start? So here are some steps to start investing. So firstly, you need to select your investing style. There are several ways to approach stock investing. So there are types like, I'm the DIY type and interested in choosing stocks and stock funds for myself. Or if you already know the stock buying game and just need a brokerage, see our roundup of the best online stockbrokers. And one more type is like, I know stocks can be a great investment, but I would like someone to manage the process for me. You may be a good candidate for a robo-advisor, a service that offers low-cost investment management. Virtually all of the major brokerage firms offer these services, which invest your money for you based on your specific goals. So once you have a preference in mind, you're ready to shop for an account.
So second step is open an account. Generally speaking, to invest in stocks, you need an investment account. For the hands-on types, this usually means a brokerage account. For those who like a little help, opening an account through a robo-advisor is a sensible option. We break down both processes below. For option 1, DIY option, and the second option is passive option. For DIY option, opening a brokerage account by yourself. For passive option, opening a robo-advisor account. So, as a DIY option, opening a brokerage account. An online brokerage account likely offers your quickest and least expensive path to buying stocks, funds, and a variety of other investments. With a broker, you can now open an individual retirement account, also known as IRA, or you can open a taxable brokerage account if you are already saving adequately for retirement elsewhere. Okay, for the passive option, opening a robo-advisor account. Robo-advisor offers the benefit of stocks investing, but doesn't require its owner to do the legwork required to pick individual investments. Robo-advisor services will ask you about your investing goals during the onboarding process and then build you a portfolio designed to achieve those aims. This may sound expensive, but the management fees here are generally a fraction of the cost of what a human investment manager would charge. For this, most robo-advisors charge just 0.25% to 0.5% of your assets under management. And yes, you can also get an IRA at a robo-advisor if you wish.
Alright, so the third step is know the difference between stocks and stock mutual funds. So, if you're going the DIY route, don't worry. Stock investing doesn't have to be complicated. For most people, stock market investing means choosing among these two investment types, which is stock mutual funds or exchange traded funds and individual stocks. These mutual funds let you purchase small pieces of many different stocks in a single transaction. Index funds and ETFs are a kind of mutual fund that track an index. For example, a Standard & Poor's 500 replicates that index by buying the stock of the companies in it. When you invest in a fund, you also own a small piece of each of those companies. You can put several funds together to build a diversified portfolio. Note that stock mutual funds are also sometimes called equity mutual funds. So for individual stocks, if you're after a specific company, you can buy a single share or a few shares as a way to dip your toe into the stock trading waters. Building a diversified portfolio out of many individual stocks is possible, but it takes a significant investment. So the upside of stock mutual funds is that they are inherently diversified, which lessens your risk. but they're unlikely to rise in meteoric fashion as some individual stocks might. The upside of individual stocks is that a wise pick can pay off handsomely, but the odds that any individual stock will make you rich are exceedingly slim. So, for the vast majority of investors, particularly those who are investing their retirement savings, they are building a portfolio composed primarily of mutual funds is the clear choice.
So the fourth step is set a budget. New investors often have these two questions in this step of the process. First, how much money do I need to start investing in stocks? The amount of money you need to buy an individual stock depends on how expensive the shares are. If you want mutual funds and have a small budget, an exchange traded fund may be your best bet. Mutual funds often have minimums of thousands or more, but ETFs trade like a stock, which means you purchase them for a share price, in some cases less than $100. Second question is, how much money should I invest in stocks? If you are investing through funds, how we mention this is our preference. You can allocate a fairly large portion of your portfolio towards stocks funds, especially if you have a long time in horizon. 30 years old investing for retirement might have 80% of his or her portfolio in stock funds. The rest would be in bond funds. Individual stocks are another story. We recommend keeping this to 10% or less of your investment portfolio.
Lastly, and the most importantly, you just gotta start investing. So stock investing is filled with intricate strategies and approaches, yet some of the most successful investors have done little more than stick with the basics. That generally means using funds for the bulk of your portfolio. Warren Buffett has famously said a low-cost S&P 500 index fund is the best investment most anyone could make. And choosing individual stocks only if you believe in the company's potential for long-term growth. If individual stocks appeal to you, learning to research stocks is worth your time. If you plan to stick primarily with funds, building a simple portfolio of broad-based, low-cost option should be your goal. So that's the end of our video that we talked about, and I hope you guys listen to what we just said and just start investing, because investing is a really good fundamental to start anything. Start young and basically
And more.
yeah. Thank you so much.
Thank you.
Assalamualaikum.